New tonight, Trudeau threatening Trump, the outgoing Canadian Prime Minister warning President Trump of immediate
Tesla taking the biggest hit, down 6%. That's not the only potential headache.
Canada strikes back. In response to Trump's tariffs on Canadian goods, Prime Minister-designate 𝗕𝗂𝗋 has proposed a 100% tariff on Tesla cars. This move is aimed directly at Elon Musk and could hit not only his car company hard, but the entire electric car market. The situation is escalating, and the trade war between Canada and the US threatens to escalate into a much larger conflict. Tesla's shares are falling drastically, and the bottom is not yet in sight. What could all this mean for Tesla, its customers, and the global economy? The reaction from Canada has been particularly harsh. Doug Ford, the Premier of Ontario, terminated a contract worth 100 million Canadian dollars with Starlink, a company owned by Musk. "It's over, it's gone," Ford said at a press conference. "We will not support companies that are engaged in economic attacks against our province and our country." But that wasn't the only move. Ford announced that U.S. companies will now be banned from bidding on up to $30 billion worth of Ontario government contracts annually. U.S.-based businesses will now lose tens of billions of dollars in revenue, Ford stressed. President Trump is solely to blame. Canadians' outrage was also directed at Musk himself. Some 230,000 people signed a petition demanding the revocation of his Canadian citizenship. Musk has that citizenship because his mother, May Musk, was born in Saskatchewan. The signatories of the petition accused the billionaire of attempting to erase Canadian sovereignty. Musk responded in his own way, writing on X that Canada isn't a real country, earning him even more hate. Meanwhile, the problems are spreading to Europe and Australia. Tesla's sales have begun to drop dramatically in California and across European states. In Australia, Tesla's sales plummeted by 70%. And as if that wasn't enough, a growing protest movement in the US began targeting Tesla stores. Attacks included vandalism, window shooting, and some stores were even burned down. As a result, Tesla's disastrous economic results revealed significant losses in early January. What began as Trump's economic war quickly turned into a crisis affecting one of the world's most famous businessmen. Elon Musk found himself at the center of a global conflict that threatened not only his companies, but also his reputation. Last year, Canada imposed 100% tariffs on electric cars coming from China, so he has experience with tariffs along these lines. The move was followed by the US, and was almost entirely aimed at protecting US automakers from competing Chinese EVs. Canada, after all, has very weak electric car production of its own. What is very strong, however, is the growth in the number of subscribers to our channel, so join in too, and don't miss any more top news from the world of equities. But current proposals call for Canada to eliminate or significantly reduce the 100% tariff on Chinese EVs, which would allow Chinese automakers to establish themselves in Canada. In the short term, this would allow companies like Tesla, Volvo, and Polestar, which have manufacturing in China and are already established in Canada, to continue to supply EVs at a lower cost. And in the medium to long term, it would allow Chinese manufacturers such as BYD, NIO, and Li Auto to invest in manufacturing in Canada. But all of these companies are now trading at very low levels. NIO shares are even trading well below $5. Trump is now considering imposing 25% tariffs on cars and other goods imported from European Union countries to be implemented on April 2nd. Trump has previously indicated he would impose reciprocal tariffs on EU countries that imported nearly $600 billion worth of goods into the US last year. The news prompted a strong response from European officials, who had been secretly planning retaliatory measures since last summer in anticipation of just such an action. European analysts expect the automotive industry to be hit hard, citing manufacturing operations in North America and complex global supply chains involving Mexico. In general, all car companies are highly globalized, so everyone will be affected. Production materials and raw materials will also be an issue. As early as April 2nd, Trump's 25% across-the-board tariffs on steel and aluminum, metals that are key to Tesla and other U.S. electric car makers, are expected to be imposed. Canada and Mexico are among the main sources of U.S. steel imports, and Canada is the largest supplier of aluminium. All EV manufacturers will feel the pressure of these tariffs because they use much more steel and aluminum than conventional internal combustion engine cars. So what will happen to Tesla's stock? First and foremost, it's good to know when they are overpriced or cheap, which 𝗕𝗂𝗋𝗶ecie DCF-based fair price calculation and relative valuation can help you with. Analysts' estimates, important company metrics, or its position in Octagon will also help you with your analysis, which is easy for any investor to do thanks to 𝗕𝗂𝗶𝗀. So check it out and pick stocks like the pros. Now let's take a closer look at Tesla's chart. When we look at Tesla's chart, we can see right away that these issues are showing up on it. Since the peak that Tesla reached on December 16th at $489 per share, the price is down 49.5% today. That puts Tesla at nearly half its value since the turn of the year. The price continues to fall today. It's getting below $230 per share, putting it at the same value as if you invested in Tesla in 2021. But at $250 per share, it's seen the highest volume of trades historically, making it a zone that the price is reacting strongly to. In the past, we've seen either consolidations or changes in direction around these levels, after which significant movement has come. Do you have Tesla stock in your portfolio, and how do you feel about the whole situation around Musk? Let's discuss this in the comments or directly on 𝗕𝗂𝗶𝗀𝗀. Good luck with your investments.